Don't look now, but another one of our housing wildcards hit yet again. Technically 2 or 3 last week. Which ones and what is the impact to you in housing? Let's find out. What a wild, impactful week. A lot happened, but let's distill that all down for you real quick. Before we do, the wild cards that hit last week were the obvious ones, the impact of the new cabinet coming in, and the big ideas wild card. Remember, we talked about how this would impact rates, and we're seeing that now. A lower 10-year treasury and a shrinking spread between the 10-year and the 30-year fixed mortgages. That's great news for mortgage rates, home buyers, realtors, and lenders. Technically, a fourth wild card hit for us, which was jobs and employment. We talked about the impact of the number 2 job creator, the US government, becoming a job eliminator, and we saw that impact again last week. 275,000 jobs cut in March, which is the 3rd highest on record, and the vast majority were eliminated by the government. So if you're keeping track at home, that would be our 4th wild card that hit for us last week, which we called at the beginning of the year. Rates, jobs and employment, the new cabinet coming in, and big ideas. Big idea being obviously the tariffs that were announced last week, sweeping new tariffs that could push the average US tariff rate from 2.5% to over 21%, the highest in nearly 100 years. That announcement is already sending shockwaves through the entire market. China did respond with their own 34% retaliatory tariff on US goods. Now the fallout is real and it's pushing the stock market down and bond yields lower. That's why mortgage rates are falling. It's because of the rising recession fears and the market volatility caused by this trade war. Let's zoom in a little bit more though and see what that means for us. Mortgage rates are dropping. Some investors are betting on 2 to 4 rate cuts this year, starting as early as June. That's because while inflation may rise due to the tariffs, the fear is that the trade-driven slowdown could push the economy closer to recession. For buyers, this is a window. Lower rates could unlock new affordability, but the window may not be open forever. The other side of the coin is housing supply. The cost of building new homes may go up. Materials like lumber, drywall, appliances, all impacted by tariffs. Even if Canada and Mexico largely have a carve-out, prices may rise due to the broader market effects and the supply chain shifts. But the real impact remains to be seen. We need to keep a close eye on that. If material prices increase, that could mean that new homes cost more. Builders may pass those costs on to buyers, meaning today's price point may be tomorrow's bargain. Here's where you come in. Realtors, your clients need to know more than ever right now. Confusion and fear create hesitation, but informed guidance creates confidence. Now is the time to help buyers understand how volatility can act in their favor, but only if they act decisively. Loan officers, this is your moment to shine. Partner with your agents, educate your clients, be proactive about rate movement. Show them how the right strategy today can secure a more affordable tomorrow. Yes, there's uncertainty, but there's also incredible opportunity. Markets move fast, policies change even faster, but people still need to buy homes, still want security, and still rely on us to help them navigate the noise. So let's do exactly that and be the steady voice. Let's show up strong. Let's lead our clients forward together. Stay sharp, stay optimistic, and I'll see you on the next one.